Hey guys, so GameStop would be $100 million if it wasn't for those dirty globalist elite scum who are holding back the poor from the MOASS.
Welcome back to Strongman Personal Finance. GameStop, my favorite company, my favorite worthless mall company that sells crap that I could get at Walmart, probably for cheaper, and also pick up my tampons while I'm shopping. Can't do that at GameStop. Just released earnings 5 days ago, and I intended to cover them, but instead I got distracted doing more important things like staring at the wall or scratching my nuts. So let's talk about GameStop's earnings. So the stock is currently trading at $15.07, which is a lot lower than the prices that the shills told you to buy it at, right? Why is GameStop so low? And why does it have a price target of $6? Well, what is GameStop? It is a specialty retailer that provides games and entertainment products. Let's think about this. You want to buy a video game. What are you going to do? You're going to go on Amazon.com. You're going to go to Walmart.com. You're going to go to Walmart. You're going to go to any other number of stores. The last thing you're going to do is go to the mall to buy a game. Oh, I need a video game. I'm going to go to the mall. No, you can go anywhere else besides GameStop. This is the most useless crap business I have ever seen. Like there's so much competition from so many different angles. Just like the trucker's going to have you in so many angles if you buy this stock, that it's a worthless company. Okay, we can clearly see the stock is going back slowly but surely to its intrinsic value, which I think is zero. So let's go ahead and cover the earnings of GameStop. So I've pulled up the consolidated statement of operations for the 3 months ended October 28th, 2023. So this, or the 3 months prior to this, is the period that we're covering. The first thing that I notice is a decline in revenues. Revenues last year were $1.186 billion. Revenues this year are $1.07 billion. That's right, they have declining revenues. Why is that? Because this is a stupid gaming company in a mall. I would literally, if I wanted a game, I would go to Walmart, or I'd download it from Steam or something, or like any other number of websites where I could download it without having to go to a freaking store. Okay, it's almost 2024. This is ridiculous, okay? So net sales are declining. This is a dying business. Cost of sales is the cost of the crap they're buying and then selling, also decreased, and they actually improved their margins a little bit from what I remember. So if we go back and look at the quarterly financials, their gross margin was 26% for this quarter, and if you compare that to the prior year, it was 24%. So they've actually improved their margins a little bit. So while their revenue declined, their overall cost of sales as a percentage of revenues dropped. However, they still have a lower gross profit because the decline in revenues more than hurt them more than the cost savings they got from the stuff that they sell. So their gross profit year over year has also decreased. However, they took a massive cut to selling general and admin expenses. They are cutting admin expenses like freaking crazy, okay? That's what changed their operating loss. They're still at a loss, oh, by the way, to 14.7. So their total operating margin is negative 1.36%. So they're almost barely squeaking a profit. Oh, that's so cute. But in essence, we have an unprofitable company that has declining revenues. Can you name one good thing about that? One good thing. No, there is no one good thing, okay? Now, you notice one thing here. They have interest income. So interest income has exploded. Why? Because they probably have a bunch of treasuries on their balance sheet, and they're collecting interest. And that makes their earnings look better than they actually are. Because you can see their net loss was only $3.1 million, but $12.9 million of that is from interest, which is not the core part of this business. So while they have a massive increase in their earnings per share, they're still unprofitable from an operational standpoint, and they have declining revenues. And this only came as a result of massive cuts to selling general and admin. And I don't know how much more you can cut those, okay? I'm sure they can. And shares have gone up a little bit, but nothing crazy. Let's go look at their balance sheet, okay? So first of all, we see they have cash. They have a decent amount of cash, $909 million, and $300 million of marketable securities, and $88 million of receivables. So they have liquid assets of approximately 1.3, 1.4 billion dollars. So we compare, well, 1.3. So we compare 1.3 to current debts of 1.4. Not the best, but I don't think they're going to go bankrupt within a year. They have enough liquid assets to pay their short-term debts, and if they sell these inventories, they will have more than enough cash to pay their short-term debts. This is the major flaw of GameStop. Okay, I've mentioned this multiple times. Their property, plant, and equipment is their stores, whatever. I don't know if they have warehouses. Their stores are old as heck. They bought these stores, and they've been depreciating them for years. And you know that's the case because you can see it says property and equipment net of accumulated depreciation of $793 million. So the actual cost of these buildings is 114.5 plus 973. So many years ago, overall cumulatively, they spent $1.87 billion on property, plant, and equipment. 90-something% of that is depreciated. What does that mean? That means it's freaking old. Okay? They have very, very old property, plant, and equipment. And what does that mean for the future? If you have old buildings, what do you think happens to old buildings? They break, they cost money, you got to replace them. GameStop's going to probably just sell off these buildings because they're so freaking old because they can't afford to buy new ones. They can't. This is a big risk factor with this company is how freaking old their buildings are and how much future costs, capital expenditures that's going to require of them. But overall, I mean, from a balance sheet perspective, they're not as bad as AMC. I will give them that, okay? They are definitely sitting pretty good on their balance sheet. The biggest issue is this property, plant, equipment. Now, let's go look at their statement of cash flows. Yet another issue here. They have negative operating cash flow. They burned $192 million of cash in the 9 months ended October 28th, 2023. So if you annualize that out, you take 192.7 divided by 9 times 12, they're going to burn approximately $257 million of cash from operations this year. Okay? Boom. And on top of that, they had $27 million of capital expenditures, which is maintaining their equipment, blah, 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 blah. But you can see they're also selling stuff. Why? Because their buildings are old as heck and they can't afford to replace them. Because they have negative cash flow from operations. They are burning money in their operations. It's like you go to work, you make $50K a year, and you spend $60K. You have negative cash flow. You're in trouble. What's going to happen if you burn through all your savings? You go bankrupt, okay? It's the same thing with GameStop. So can somebody tell me one good thing about this company? It's unprofitable. It's got declining revenues. It has super old property, plant, and equipment. The only thing that's positive is interest income, which isn't going to last forever. They have a decent balance sheet, but with negative cash flow, eventually that's going to erode away. And then what's going to happen to this mall-based game company? Oh, it's the future. If I could think of one company that I think will be around in 20 years, the only company I could imagine that would be here, if I had to go to an island, I would definitely 100% buy GameStop. Who goes to this anymore? This company's a freaking joke. If you listen to any idiots that tell you to buy this, you need to go suck yourself off. God, I hate this crap. So, that's my thoughts on the earnings. Complete utter freaking trash. Nothing impressive about this. Didn't they buy crypto or something? I saw gains on, let me see. Where was that at? Digital asset impairment. Oh, did they have some crypto? A bunch of freaking losers. All right, guys. Talk to you later. Cheers.